Good morning, it's Monday the 20th February and this is the Phoenix Blue Update brought to you this morning by Tom Colley. Right, we're following on from what was a uncertain week. We had a lot of good US news last week. The markets failed to take account of those and despite an initial bullish reaction on the dollar, everything fundamentally pointed towards dollar strength. That didn't come towards into Thursday. We had a day of dollar weakness. Wednesday was a dollar weakness day. So was Thursday. Friday was a bit of a recovery, but Friday also saw a divergence between the dollar and the yen. So really another week for being very cautious until we see some confirmation on direction. We're still concerned about, let's call it politics as much as fundamentals and technical politics, being Donald Trump's administration and outbursts and what have you from there, which are having an effect, if only making traders cautious so that they are exiting trades sooner than they normally would. Adding to that, and we've got a quiet week's news-wise this week. Over to the news. We've already had some Kiwi news out there. PPI came in roughly on forecast, 1 versus 0.9% forecast. In the States, we've got a bank holiday today. It's President's Day and banks will be shut, so that will have the effect of a lack of liquidity in the markets. So a day for very cautious trading today, particularly as we will see a lack of liquidity in that US session this afternoon. Overnight, we've got Aussie monetary policy meeting minutes. We had a bullish statement from the RBA the week before last. We'll be looking into the detail of this to see if there's any more given away or any more indications of forward plan, etc. Also worth noting that the Governor Lowe of the RBA will speak twice this week, and Aussie is a market that we are interested in at the moment. The Aussie has been the strongest currency by a considerable distance over the last couple of weeks. It is at a point where, a decision point where we will either see a reversal or we will see that Aussie strength continue to play out. We'll see that on the chart in the moment. Okay, here we have the dollar index. This is what we were talking about at the end of last week. We had price on good news from the US and Janet Yellen being much more hawkish than usual, talking about rate rises. We saw a push up to this level here, and then immediately price turned around, and rather than just pulling back before continuing to the long side, which is realistically what we would normally expect, we saw a significant retracement and then followed through on Thursday to create this low around the 140 level. Now, any break below that will confirm medium-term dollar weakness. Dollar weakness would only confirm to be or change our longer-term bias if we see a break of this level at about 99.50, which would be the neckline of this head and shoulders playing out of there. So we would expect a downside to around the levels of the bottom of the spike of election night in the States. We really need to see a move above 101.50 here to see dollar strength to the long side going forward, and that would play out with our bias of dollar strength based predominantly on monetary policy divergence between the US, Japan and the euro. Okay, over on the yen, we can see a similar pattern to the dollar index there, the exception being Friday, where we saw a bearish move on the yen, which is contrasted on the dollar index, the chart before, and that was a bullish move. So on Friday we had yen and dollar moving out of their normal sequence. We expect them to move normally hand in hand. So that's a warning for us as well, that there are uncertainties in the market and we really need to be careful. There is a level through here that I see at about 112.55, 112.30, and that is an interesting level. If price returns to that level, it didn't quite reach it here on an exact basis. If it returns to that level, we will look for price action opportunities or change of cyclicity opportunities to the long side, as long as that is in keeping and in correlation with the dollar index. Over on the euro very much followed the dollar. We had the recovery immediately following that data, good data from the States. We had follow through on Thursday, and then we had most of Thursday cancelled out on Friday with the bearish move to the downside. So again, uncertainty in this market. You're obviously going to correlate this with the dollar index, a break above the high. And we've got a level through here at about 107.10, something like that, which or even back to the 108 here, which would constitute the same neckline of a head and shoulders, that being the left hand inverted head and shoulders in this instance, the left hand shoulder, the neck, and potentially the right hand shoulder if we get back to 108. We've got a COT signal there short at the moment, so we wouldn't prefer a break to the long side, but we would obviously correlate that with the dollar. But we've got this intermediate level prior to that, which may give us an opportunity if price moves in that direction. Over on the Aussie, where I was talking about the news, we've got the meeting minutes out tonight, and then the RBA governor speaking twice this week. Price has been up to this 73.30 level where it peaked with the dollar on Wednesday. We've now got downside in this market. We've got an order in here for that market to double top based on this level going through here. Failing that, then we have a market cap through at about 7.830, 7.840 through here, where again we would be looking to enter the market to the short side unless we have evidence, say from the dollar, that would be a risky trade. So we still see this market turning as being more probable than it breaking through, but as traders we're always prepared for both scenarios. The Kiwi gave us a nice opportunity on Thursday. It retested this box range here. We got short through here on this high test end of day bar. We are looking for a possible double top here to get into that trade once again, or if you didn't get into it through that high test, there may be an alternative there. Alternative to that is we're looking for a break below this 7100 area here, and a close below pullback retest and take it to the short side. We are seeing a divergence in the views of the central banks in New Zealand compared with Australia. So Aussie New Zealand is one cross pair. We're very interested on that basis because there is a distinct, or at the last meeting 2 weeks ago, there was a distinct divergence in expectation and policy. Another cross pair that we've been watching is Aussie JPY. We had an opportunity Thursday on the end of day trade. We've got this big engulfing bar through there, which was predicted at the Protege boot camp on Thursday. I didn't get that opportunity. Unfortunately, I was on a train and not able to take it, didn't see it. I have this morning entered on a retest of what is a 4 hours or a 1 hour head and shoulders on a lower time frame, taking to the short side to get into that trade, looking to target this 85.50 level through here. So again, we are focused on cross pairs because of the uncertainty, the political influences in the dollar pairs. We're being very cautious in that area, and we're looking to take the dollar out of the picture where we can, as I've said, with the cross pairs. Okay, guys, that's it for today. Do trade cautiously. Don't forget it's a bank holiday. We expect that lack of liquidity. We're also cautious because of what happened the back end of last week in terms of the dollar, the yen, the dollar versus good US news and what would be expected from that move. So caution really needs to prevail, certainly the early part of this week. Let's wait for some direction before we jump into the majors and minors. And concentrate on intraday trades where we can get money off the table within the day, and look to avoid the political output that's coming and making the markets more volatile than they would usually be. Okay, have a great day, and we'll speak to you again in the morning. Thank you and goodbye.